If you leave your extra cash sitting in a standard checking account, you are slowly losing money. Every year, inflation eats away at what that money can actually buy. The historical antidote to this invisible tax is the stock market. Over the last 80 years, the market as a whole has returned an average of 8 to 10% annually. Today, we are going to walk through exactly how to capture those returns. I am going to pull up my phone and show you step by step how to buy your very first S&P 500 index fund. To follow along, you will need 3 things already set up: an approved brokerage account, a linked bank account, and settled cash ready to invest. Once we complete this quick 5-minute process, you will officially cross the line from a passive saver into an active investor. Let's get started. Open up your brokerage app. Look at the bottom menu bar and tap the search icon. Before we can buy anything, we need to know what to search for. In the investing world, we use something called a ticker symbol. You can think of a ticker symbol exactly like an airport code. Just like you type JFK when you want a flight to New York, you use a specific 3- or 4-letter code to look up a specific fund or company. Go ahead and type VOO into the search bar. This is the ticker for the Vanguard S&P 500 ETF. By purchasing this one specific fund, you don't have to guess which individual companies will succeed. You are instantly buying a small piece of the top 500 companies in the United States all at once. Now, tap the Trade button and select Buy. This brings up your main order screen. Take a look at the buying power number on your screen. This represents the actual settled cash you have available to spend right now. You will also see the current market price of the fund. Right now, one full share of VOO is trading for around $600. For a lot of the getters, seeing a high price tag exactly like that is a complete stopping point. Modern brokerages have removed that hurdle entirely. You do not need $600 to get started today. Look at the top right of your order interface and tap the drop-down menu that currently says Shares. Here, you can select Buy in dollars. This option lets you set a specific cash budget instead of forcing you to buy a whole share. This equation shows how it works. Invest $100 into a $600 stock, and you own 0.16 shares. Now, notice recurring investment. This illustrates dollar cost averaging. Investing $200 every 2 weeks buys fewer shares when high and more when low, balancing your average cost. Automating your schedule this way takes human emotion out of the equation. You set it once and let the math build your portfolio in the background. You might also notice an option for a limit order. This is a tool used to tell the app the absolute maximum price you are willing to pay if the market drops. But there is a catch. The moment you place a limit order, the app reserves that cash. Your available buying power drops immediately, even if the target price is never reached and the trade never happens. To ensure we actually buy the fund right now, switch your selection back to a standard market order or buy in shares. Type 1 for the share quantity or enter your specific dollar amount. Tap the Review button, check your details, and swipe up to submit. Once you see the order confirmation screen pop up, the transaction is locked in. You are officially an investor. Tap back to the app's main home screen. If you look at your portfolio balance, you will now see your shares of VOO sitting safely in your account. From this point forward, the strategy is simply to keep buying. The daily dips and spikes of the market are irrelevant when you stretch your timeline out across several decades. Look at this growth curve. When you hold an asset for 20 or 30 years, compound interest does the heavy lifting. The returns you earn begin generating their own returns, turning modest monthly contributions into a substantial portfolio. Now that you've made your first trade, drop a comment below with the ticker symbol of the fund you just bought. Achieving financial independence doesn't require perfectly timing the next hot stock. It requires the quiet, automated discipline of consistently owning the entire market.